And guys, so in today's video, I want to talk to you about this beautiful NAS100 sell that we took on the 26th of March that not only myself, but everyone in the Discord was able to profit from. And as you can see, it gave us a nice 1 to 2 risk to reward. However, if we had held it for the entirety of its move, that would have been an incredible 1 to 12 risk to reward. Now, we didn't hold this for this entire move, and that is something that I am implementing into my backtesting to see how I can go about holding these extended moves for their entire range. However, the topic of this video is going to be NAS100 because it is one of those pairs that I haven't traded before and I actually didn't really like that much. Now, the reason why I didn't like it is because the lot sizes are so much harder to calculate as opposed to normal currencies, because all of this is much different to how they are with currencies, right? All of the ticks, all of the data, it is a little bit different, and this puts a lot of people off, and it actually did put me off. However, recently I've been doing a lot of backtesting, and as we can see from this backtesting data, the win rate for the strategy is about 48.39%. Mind you, this has only been tested on 3 months worth of data, so January, February, and March of 2024. But I am currently in the process of doing a backtest for the entirety of 2023 from January all the way to December. So that will give us a lot more conclusive results. But for the time being, this data really shows us that even with a 48% win rate, look at the gains. 8.46% in January, 9% in February. Of course, March has been a little bit slow. However, the first 2 months, absolutely insane results. And this is simply following the Judas swing strategy that I teach for completely free on my YouTube channel. Now, this in itself speaks a lot of volume, because if you did have a funded account, say you had a 100K funded account, this would have been $8,000 that you would have been up for the month of January, and this would have been $9,000 that you would have been up for the month of February. Now, that's $17,000 in 2 months that you could have generated just by trading this simple strategy, even though the win rate isn't incredibly amazing, right? It just goes to show that having one strategy and being consistent with it is going to gain you so much more results than strategy hopping and chopping and changing. However, I'm deviating from what we're here to do, and that is to talk about this trade right here. So let's break it down and understand exactly why we took it, because the order flow on NAS that I have witnessed recently has just been amazing. So first things first, let's rewind all the way back to here and really talk about what is going on this chart. As we can see, there's a lot of drawings. It is a lot of mess going on. However, the mess makes sense. So first of all, what do we see? Well, when we come up to the daily, this was all covered in the weekly outlook that I sent to all of the VIP members. However, the sentiment is that we are stuck inside of a trading range. However, overall, we are bullish. And as we can see, we've been put in a series of higher highs, higher lows. And here we failed to break this high right here. So therefore, we are stuck inside of this range right here. Now, this can be our potential low, this can be our high, and in the middle, all of this is just substructure. So for that, we drop down to the 4 hourly. Now, what can we see again on the 4 hourly? Well, we are bullish because we've got a series of higher highs and higher lows. We come here, break this high, and now again, we are stuck inside of a trading range. So as we can see, this right here would be our low. This would be our high. So anything that happens in between is again substructure. So for this, what do? We drop down to the hourly. Now, what can we see on the hourly? Well, the hourly tells us a little bit of a different story. And that story is that we have flipped bearish, because we've come up here, we've put in a higher high, a higher low, a higher high, and then we've broke below this higher low right here, putting in a lower low. They've put in a lower high, and then we've broke below again, putting in a lower low. Then we came up, put in a lower high, and then we've broke again, putting in a lower low. Now, as you can see, this structure is very, very clean. All we're simply doing is breaking structure to the downside, coming up, mitigating, and continuing the pro trend direction. So because we understand that we are in a bearish market, our next step is to identify key areas in the market that price can potentially come up to before giving us a nice reaction. So what can we start to identify? Well, first things first, we can see that price is breaking structure to the downside. And what is it doing? It is leaving liquidity, sweeping the liquidity, and then breaking structure to the downside. So when we understand this concept, now what do we see happening in front of us? Well, we've broken structure to the downside. We've left all of this liquidity. We should sweep it and then break structure to the downside. Now, that is simply just following historical data because that has happened before, and we're simply just allowing it to happen again. Now, when it happens again, all we're simply going to do is react if it happens again. But we're now starting to build a story. Now, after we start to build a story, we have to now identify areas that price can come to. So let me mark out this liquidity, and where did price gravitate towards? Well, price gravitated towards this fair value gap right here. Now, after this, price then broke structure to the downside. And after it broke structure to the downside, it has now started to leave this trend line liquidity. Now, once we have this trend line liquidity, where is the next area that price can potentially be gravitating towards? Well, right here, we've got this inside bar. And an inside bar is simply just consolidation on the lower time frames because it didn't break the previous candle's high or low. So we see this inside bar, which means that there could be a potential stacking of orders from the banks and institutions. So that already is telling me that this is a potential area because it is sitting above this trend line liquidity right here. So if we drop down to the 30-minute, what can we now also see? Well, we can also see that this was the area that actually swept this previous liquidity. So this area swept the liquidity and then went on to break structure to the downside. Now that gives me even more insight that this area is potentially going to be the one that holds. So if we continue dropping down on the lower time frames, we can see very clearly that right here we got this beautiful sweep of the high, and then price came down and broke structure. So again, I'm very, very interested in keeping this zone alive because I want to see price gravitate towards it. But for the time being, if we go back up to the hourly, there is another thing that we also have to keep in mind. And that is that this could potentially also act as liquidity. Now, why is that? Because if we look on the left again, what do we have? We have this fair value gap, which was tapped into right here. However, we have this zone all the way up here. And if we really take a look at what is going on with this zone, we can start to identify that that right there is an equal high, right? So because this is an equal high, this is a double top. This means that this is a potential target for price to come and take. Now, this isn't a target that price has to come to immediately. Just remember that. In the markets, price will engineer things for the future. And what can potentially happen is if we go up and see that we are bullish on the higher time frames, price can potentially come down to an area of interest and then use this liquidity up here as targets for areas for price to gravitate towards. So we just have to keep this understanding in mind because we have to understand what price is telling us right now and what price is potentially going to try to tell us in the future. So we have this understanding that there is a double top right here, which can be seen as liquidity because it swept this high right here, left liquidity and broke structure to the downside, leaving all of this imbalance. So price can potentially gravitate towards this in the future. However, if we continue on where we are at the moment, we have this zone right here, which I have deleted to keep the charts a little bit cleaner. Now, if I also remove this line, it will help clean up the charts a little bit more. So we understand that this is the potential area that price is going to come to before giving us a reaction. So that means price has to sweep all of this liquidity, which it has done. And then it has to come up into the zone and give us one of our entry criterias in order for us to take that trade. So as a trader, we've now built the story, we've built the narrative, We've understood what price is trying to tell us. And now all we simply do is wait until price gives us our entry criteria in order to execute so that we can be profitable. We don't want to jump the gun. We don't want to rush. We don't want to set limits, because potentially what can happen is price could come up here. You might have a limit set and it might sweep above it before coming down, which is why we wait for our confirmation on the lower time frames to understand that yes, price does actually want to go in the direction we intend it's gonna go. Right. Having said all of that, let's add a little bit more of a confluence to this trade. Now, if I just go back a little bit more, what else do we see happening right here? Well, this is our classic Asia high and Asia low. So we've got our Asia high right here that I'm going to mark out, and then we've got our Asia low right here. Now, why is this important? Because the Asia high and low can also be used as added confluence, because that is also resting liquidity. So what potential newbie traders can do is they can see this zone right here, right above the Asia session, and they think, yes, when price sweeps above, I'm going to take a short going down in the pro trend direction. However, they fail to understand this overall story that price is trying to tell us, that previously it has engineered liquidity, swept it, and then broke structure. So now again, it is engineering liquidity. It wants to sweep it and then break structure. So once we start to understand this narrative and this story, we are no longer going to be susceptible to taking these smart money traps that price is going to be putting into place to take out the novice traders. So having understood all of this, we've got our Asia high right here. And now all we simply expect price to do is to sweep the Asia high, and we're just going to wait. We're not going to react, and we're just going to wait until price comes and tags us into our higher time frame zone that we have marked out. So if I play price on, it comes, shoots straight up into that zone, taking out any liquidity that was resting here, whether it be a trend line liquidity, whether it be smart money zones. Everything has just been taken out, and all of this liquidity has just been taken. Now, what do we do next? We wait for a market structure shift in order for us to understand that the market has shifted sentiment from bullish to bearish so that we can execute our trades. So again, if I play price on, nothing at the moment is telling me that I want to get involved in this trade. And that is simply because we've got a higher high, higher low, and a higher high. Therefore, our trading range is like this. And if price breaks below this right here, then I'm interested in getting involved with sells. But until that happens, I'm not interested, because the market hasn't shifted any structure. So again, let's continue to play price on. And what do we get? We get a break of structure to the upside, signifying that we are still bullish. We have a higher high, a higher low, and a higher high. Therefore, this is now our new trading range. So this is our new high. This is our new low. So for the market structure to shift, we have to break below this low right here so that we can then execute some sort of short position. However, for the time being, we are going to sit on our hands and wait for price to give us a market structure shift. Now, what do we get right here? We get a break of structure to the upside, which can also be considered as a sweep of liquidity. We have our new low right here, so we need price to come and break below this low right here in order for us to consider any sort of selling opportunities. So if I mark this on right here, and if I play price on, right there, we get this nice breaker structure to the downside. And what do? We identify our order block that has broken structure to the downside, and that is where we're going to be taking our entry. And as we can see in this instance, this pin bar is what I chose as my entry, and that is because it broke structure to the downside, because it broke right here and it broke right there. So we have a sweep of the high like this, and then if I make this a little bit more clearer, we have a sweep of the low right here, signifying that we have gone from a bullish market to a bearish market. Therefore, now we should see some sort of short position from here and a continuation in the new pro trend direction. So I've identified this area as my potential entry. However, some may see this and think, I want to go for the extreme. And now this is also a very valid zone because this is also a inside bar. And as I mentioned, this is what we are tapping into right now on the higher time frame. So an inside bar is again just consolidation on the lower time frame, and it didn't break the previous candle's high or the previous candle's low. Therefore, this could be a very valid entry. And from my backtesting, what I've seen is that NAS doesn't usually like to go all the way to the extreme. It usually likes to go to the closest area that broke structure to the downside and continue on from there. Therefore, I picked this as my entry. I put my entry at the open of this candle, stops just above the local high, and now we have to identify our targets. Now for this, we go up to the higher time frame. And what can we see? Well, the 15-minute is actually still in its pro trend direction. We've got a higher high, a higher low, and a higher high. Therefore, in order for us to stay in the pro trend direction, price can potentially come down to tap off of this inside bar and continue in its pro trend direction. Therefore, our immediate targets would be right here, because if this area is going to hold and price is going to continue bullish, this is exactly where we can enter before price reverses. However, we still have to understand that overall we are bearish. Therefore, there is always the potential that price can push all the way down and continue in its pro trend direction, which in this case it did. However, we still have to understand what the higher time frames and the lower time frames are all trying to tell us and the story that they are trying to build. However, let's go back into this trade and let's see what happens. So if I play price on, price does push up just a little bit straight into that inside bar, and from there price just plummets. Look at that. A beautiful clean run straight to the TP. And as you can see, when I go up to the 15-minute, that price halted exactly below this low. And from there, again, if I carry on playing price on, you see how it reversed straight back up here and then it continued down. Therefore, what could potentially happen is people could put their stop losses at break even. Price is going to come up, take them out, and then continue in its bearish move. However, if we remove all of this lower time frame stuff that we have going on right here, and if we even remove this right here, what can we now see? Well, the story that is getting built is that price put in a high low, high high, high low, high high, and then price actually broke structure to the downside right here and gave us a market structure shift on the 15-minute time frame, following on from the 5-minute time frame market structure shift up here. So it's only right, if we continue with the analysis, that price is going to come back up to a higher time frame area of interest. And in this case, we've got this 15-minute order block that broke structure to the downside and left this fair value gap. And as we can see, price came back up, tapped into this order block, and look at what it did. Just continues on its way down. Now, having this level of understanding about price structure and understanding how all the different time frames actually correlate with each other to build this story, to build this narrative of where price is and where it's trying to go, is a super skill that we as traders have to really understand and gain insights from. And this is where something like the VIP group comes in handy, because every day we are posting these trades and talking about what we could do better, where price is trying to go, what price is trying to tell us. And this sort of level of high communication is something that is key in your trading journey, because not only does it help you develop as a trader, but it also helps develop you as a person, because not only do we talk about the trading aspect, but we also talk about the psychological aspect of how being in a trade like this can affect you in the long run. However, going back to the topic at hand, I hope you guys enjoyed this breakdown of this incredible trade that we took on NAS. Hope you guys got also some insight from the backtesting that I'm doing, and I will be dropping a video when I've got backtest results for the entire year of 2023 from January to December, and then we can dissect and analyze exactly how it all looks. But so far, I am absolutely loving NAS, how it moves and how it delivers price, because as we can see, this piece of price action right here has just been absolutely beautiful. This price action has just been incredible because, again, if we just analyze this one more time, price breaks structure, come back up, creates liquidity, sweeps it, breaks structure, creates liquidity, sweeps it, breaks structure, creates liquidity, sweeps it, breaks structure. So that is potentially what we can see going into next week. So I hope you guys over the weekend are able to do some sort of back testing, or even just do a weekly outlook for yourself where you understand how this price action has been delivered and where price can potentially go moving forward. Because again, in my opinion, from what we've just seen, price action is most likely going to go down into a higher time frame area of interest before it continues its higher time frame move up, because we are bullish, targeting those liquidities that it has engineered and left for us in the past. But on that note, guys, I hope you enjoyed this video and got some insight, and I hope you have a great weekend and spend it backtesting, learning, so that you can go into next week and make an absolute killing these markets. But on that note, guys, I hope everyone has a great weekend, and I'll catch you guys in the next video.